I'm all right. How are you?
Hey, I'm great. It's so nice to meet you.
Likewise, nice to meet you too.
So I had a lot of questions for you. I think my base and a few other discords I participate in had a lot of interest in your yield boost. But even before I talk about that, tell me a little bit about your background, even though I read a bio, so people can
Yeah.
know you.
Well, I'm from Scotland originally. Came to the US 14 years ago, and did a kind of fairly traditional finance career. So started in investment banking in London, and then went into asset management, got involved in ETFs, and have really stayed with that product throughout my career. So I'm originally I was originally with BlackRock, and
Okay.
then started with different firms after that, and then moved to New York with a previous firm. Ended up staying, and then started my own firm 7 years ago, and here we are.
Awesome. I had said something to my audience. I said, yeah, I'm going to be interviewing Will Rhind of Granite Shares, the founder and CEO, and a Brit. So I just sort of, you make that
Yeah, of course.
transition. My very first foray into Europe, I was a young engineer working for a computer science corporation, and I flew into London and had another engineer take me up to Scotland, and we went through
Nice.
Glasgow, and I went in a little town. I don't know if you've ever heard of it, called Vale of Leven, and
Okay.
went and saw Polaroid. It shows you how dated it was, right? The old camera company that ultimately went out
Wow.
of business. They had a data center in Boston, and then they had a second data center. So I was going over there to install
All
some
right.
software in their mainframe. So whenever I hear Scotland, I always have fond memories of beautiful countryside, really, really. And
Yeah.
visiting the locks and seeing just a different existence than we see in the US in a lot of ways. All right, let's jump in if it's all
Yeah.
right with you, and I'll ask you.
Perfect.
So I don't know if you can't answer something, just tell me, because I know it's real funny with these SEC launch dates and things
Mm.
for Yield
Yeah,
Boost.
no.
So if you can't say it's coming, I know it's coming soon, but don't worry about the date if you don't want to. But I do have some questions around how you plan to structure it. Um,
Yeah.
and so let me start with saying um, I saw all of the ETFs or the underlying pieces that you planned on using, and I saw that there was a number of them that you already had leveraged ETFs funds like the natural gas, the Bitcoin ETF, the silver ETF, yada, yada, yada around that. And then I noticed that some of the other ones you were going to, it was sort of a guess, like use Direction, use ProShares, whoever had an appropriate ETF from probably an options numbers game, right? That you
Correct.
need a certain amount. Now, will you be utilizing a sub-advisor to do your options for those since you're going to try to derive income?
We don't
Okay.
we do it ourselves. So
Okay.
we have our own portfolio management team, and we trade a number of different strategies. So we trade commodities, we trade equities, a number of different instruments. We do that ourselves.
Okay.
Obviously, with the help of brokers that we use or counterparties that we use.
Sure.
But yeah, it's all done by us.
Now, will this be a different foray in the sense that you have some leverage products? And I always tell people the story about how in Europe it's a little less regulated, and there may have been a 5x, but clearly there was a 3x MSTR and all of that. And I love it. I mean, I love
Yeah.
that idea that you have a 70% volatility move in an underlying when you're 3x on a very high IV stock. So, um, That's good. That's great that you were able to do some of that. I also saw, and I didn't know this till I read your bio just like yesterday, about you being involved with the Spider Gold Fund.
Yes. Yeah, I was CEO there for 2.5 years.
Okay. That really was my foray into getting into retirement. I worked in the tech industry for years and years. And in
Yeah.
that, I thought when before the dot-com bubble burst, I said to myself, boy, I'm going to be able to retire. My options are worth so much money. And I was working for one of the big tech companies for 12 years. And then all of a sudden, you know, the NASDAQ just, you know, went down. It's like the same thing that worked before, it didn't work anymore, right? So I was
Yeah.
like, oh, what's this next decade? And I sort of found commodities and in particular gold and oil and just rode those and traded those
Well,
and just,
that was a
you know, it
good time
was
to get in.
it was a good time to be in. So I'm not so sure that we don't have something similar over this next number of years, but we shall see. So far, it's been FOMO and it's been AI and a few other things, but I think commodities are going to raise their head again. Um, so let's talk. On these particular options, can you talk to me a little bit about the strategy other than the fact that I saw you were going to write a put? Will you do a full
Right.
synthetic or will you just have a long call, or how do you plan to derive the income portion of that?
Yeah. So at the moment, and the key is that there's a little bit of flexibility here because
Okay.
these will be actively managed funds, just like our leverage. So although our 2x leveraged funds are, let's call them systematic,
Yeah.
there's still a bit of flexibility, obviously, to be able to manage that exposure. And it'll be the same with the options. So
Okay.
although it's put writing, there'll be
Right.
some flexibility in order to derive that level of income.
Okay.
And so, whether it's fully synthetic, or just, it depends on what the liquidity is like in that particular option on the particular day we're trying to do it.
Okay.
But yeah, a little bit of flexibility there, which we'll maintain for active purposes.
Okay. I think it might have been my internet glitched a little, but that's fine. I got the gist of what you said. Can you hear me now, or let's see if,
Yeah, mine as well.
okay.
Yeah, I can hear you. Yeah, see
Okay,
you
okay.
fine. I
So,
think it was maybe me.
okay. So when you say
I never know.
flexibility, that is coming from how you defined on the prospectus to the SEC saying this is our intent, and it gives you a little bit of flexibility within that realm of how you structure calls or puts or options, right?
Exactly. Because
Okay.
if you say, like, let's take a hypothetical example.
Yeah.
If you were to say, I'm only going to buy calls that are 5% out the money or whatever it may be, and on that particular day, that there's less for the amount of size you are looking to buy, there's not enough liquidity in those particular calls, and you have to go somewhere else. You wouldn't have that flexibility. You'd end up pushing the market against you and
Okay.
therefore, harming the return and the investors in the fund. So that's what I mean in terms of having
Okay.
that flexibility to
Okay.
to go around any sort of traditional liquidity constraints or whatever.
How have you folks at Granite, obviously you've seen the momentum that, I mean, you're doing some things unique, but I'm sure you've seen some of the momentum at Defiance and YieldMax and around the income funds and are probably saying, hey, this seems like a good area to go further in. I mean, if I was in your position, I'd be looking to do that. Um, when I look at the space, and I've been reporting on it for about 5 or 6 months, so I was an option guy myself for a number of years, just utilizing the technique. So the only thing new for me when I saw the newer methodologies was the fact that they were going into the flex marketplace a lot of times. And they were doing that. So when you had a single stock and it wasn't a true ETF where it was a basket of stocks, it just was, say, a micro strategy, and you're running an income fund around it, you're limited since you can't own the underlying because that's not really meets the SEC's definition of a ETF. So they were doing synthetics, and then whether you sell a put or write a call, whatever you do, there's just certain guidelines. And then it took me a while to really, the electronic settlement of those in the flex seemed, I don't know if I'd say, I see things that were way out of the money and they were buying them back for 11 cents rather than for a penny. And as I was explained to, they literally have to make a phone call and do it when they're in the flex marketplace versus just the traditional, options market. So would this be something you guys do as well? Will you be,
We'll have to see. I mean, again, there's
okay.
sort of limits to what I can say now
Yeah,
about it.
gotcha.
But suffice to say, that we have evaluated kind of all these options,
Okay.
no pun intended,
Yeah.
and
Yeah.
where we think we can derive the most amount of income for the strategy, then we'll be there.
Okay. Makes a lot of sense. Speaking of that, do you have target yields or target incomes that you're thinking about? Okay. Can you share
We
any?
that's actually a really
Go ahead.
it's a really good question. So the short answer is we don't,
Okay.
and the regulator really, I think, maybe for good reason, like has had an issue with that historically.
Okay.
So it's that concept, broadly speaking, has been tried before, and it's very difficult. I mean, I'm not talking just an option space. I'm just talking
Yeah.
just generally, having a fund that says like, you know, 7% income or 10% income, whatever it may be. I think it's difficult to sort of it may be seen as promissory in some level,
Okay.
and therefore, the question becomes then how do you sustain that, over different
Yeah.
market cycles? But yeah, it's challenging to do that.
Well, that leads in just what you were saying. It actually leads to another question that I had written down, but just naturally. And that is, I think there's trepidation on some of the part of people who chased yield. They see some of these new offerings and they see some of the funds, and especially on a high IV stock that's very volatile. So at times, just whether you're using a covered call strategy, I always say, hey, they're really naked calls, but you do have a long stock synthetic that you're covering. And I'll see a lot of premium come out of that. So naturally, if that's a high IV, that tends to produce a higher yield. But when it goes awry and it runs well past the call strike price, then it turns into a disaster and having to buy it back. And so all of a sudden, I'll see somebody saying, hey, I got a 70% yield, but I got a 55% NAV reduction in the underlying. And
Yeah.
that's one of the questions of whether you can say, what a yield target is. Part of it, now I'm seeing a lot of people that don't really understand the options. They'll say, well, Bruce, can you steer me to a fund that does this or does that? And I say, well, the market giveth and the market taketh, right? I mean, in a down market, it's difficult, right? In a bull market, you can get that yield, but if it runs too hard and too fast and it's too aggressive, it'll outrun where you write those. At least you
Yeah.
have something on the other side that. So just maybe your general thoughts about some of that and what you guys are thinking about it as much as you can. I realize you may be
Yeah. I
limited.
mean, I think that you kind of hit the nail on the head, which is what I always say is there's no free lunch, that um, you can't sort of have unbelievable levels of income and unbelievable levels of growth at the same time.
Right.
There has to be a balance. There has to be a compromise. And clearly, on one extreme, you can have growth funds that are built for entirely that reason. So you're investing in high growth stocks. Typically, there's no income or incredibly minimal amounts of income that get produced from those stocks. It's all about the capital appreciation. And then conversely, you have fixed income or any kind of designed income strategy where you're producing income and that's the sole goal, and you might have very little capital growth. And you're okay with that because you're accepting your level of income. So it really comes down to, again, the design of the particular ETF or design of the fund, and then what are you looking to get out of it? And are you prioritizing growth? Are you prioritizing income? Or maybe it's a bit of both. And it's again about understanding what you're investing in, and learning what is the right fit for you, and your investment objectives.
So, and thank you for that, because that resonates exactly in sort of my thoughts and ideas and experience. And it's just good to hear you say that. Um, when you and Granite Shares were envisioning Yieldboost, did you immediately say income though? I mean, this is say I just want a 2x long Apple because I think Apple's going to really go up. I go out and buy a 2x Apple, and you manage it so it has notational and resets, and it gives me 2x performance. But it's a whole different deal. And then did I pick the right time to get a 2x, right?
Yeah.
Is Apple going down? So I'm going to double my loss, right? But all
Yeah.
of a sudden in this income world, like you said, so many people want it both ways. They want, well, sure, I want some growth, and if I can get great yield, and usually one sort of takes away from the other. Um,
Yeah.
what have
So,
you,
so
yeah, go ahead, please.
Well, what I was going to say is that, to some degree, all of this is just really using the ETF wrapper to wrap or make existing strategies much more accessible. So, 10 years ago, 15 years ago, whatever, I would speak to financial advisors, who were regularly, on a regular basis, they were doing covered calls on a gold ETF like the GLD. And
Sure.
so that was a part of their strategy. So they would be long gold, and then they'd be selling calls, and they would be selling calls to generate some income. And that was obviously what certain financial advisors were doing. And those were, sophisticated investors doing that, on behalf of their underlying clients. And so fast forward today, with single stocks, it's the same thing. You've got, a group of investors doing that themselves, or ETFs. And so really Yieldboost is just an extension of that, knowing that there are a suite of levered ETFs in the market that are highly, highly liquid and highly traded. And there's a very liquid options market with those ETFs. So we know that people are doing that already. It's a question of packaging that now into an ETF format to make that more
Correct.
accessible. But you're effectively replicating what a lot of people are already doing, it just doing it in a systematic way.
Yeah, I find exactly what you're saying. I'll catch myself. I'm in another family fund where I went in and bought their GDX options-based income fund. And knowing that market so well, I bought just a small amount of shares. And I said, oh, these fund managers, they're going off this low IV, but gold's starting to run. These stocks are going to hit earnings, and their earnings are going to be outsized because gold's gone up $300 from the previous quarter. And they're going to blow out earnings and move up. And it's exactly what happened. They wrote their calls very conservative, out about 2%, and the stocks would go up 8%
Yeah.
in a week. And therefore, that income fund didn't do very well, right?
Right.
And so I just said, well, I'll buy my own Newmont calls, and I'll buy my own Nikio nickel, and I'll write those calls. And so, but not everybody can do that doesn't have that
Exactly.
skill set. So, and people didn't, they would say to me, well, Bruce, you said that this was going to be a good fund. I said, well, it should be a good fund over time because I see it doing very well over a multiple number of years. But if they keep managing it the way they're managing it, it's not going to perform good when the miners
Yeah.
run. They're going to have their times they're flat and down on retracement. So, what would you say is one of your more popular prior to Yieldboost going to be launched? You've got a number of commodities and 2X stocks, and are they the
Yep.
typical NVIDIA or Tesla based, or do you have any crypto
Yeah.
ones at all? Do you have any
Um,
MicroStrategy or
we
Coinbase?
so we do.
Okay.
So we've got two sides of our business. We've got the US business, which is
Uh-huh.
the biggest business, and then we've got a European business where we're active in all the major European markets. So the biggest fund we have is 2X NVIDIA. That's
Okay.
NVDL.
Okay.
That's the largest actually levered single stock ETF in the world,
Okay.
and that's about 6 billion in terms of assets.
Wow.
And
Nice.
of course, this week, given that we're heading
Yeah,
into
you have
NVIDIA
earnings
earnings
on
tomorrow,
tomorrow, right?
that's a very big talking point for the market. Probably the most important event, I think, in the market
Yeah.
this summer.
Yeah.
So we're all waiting for that. But absent of that, we have Coinbase, which is a really 2X Coinbase, CONL. That's a big fund for us. And then, as you kind of talked about, we have MicroStrategy in Europe.
Right.
So we have a number of these in Europe where we have a bit more flexibility, and we can offer a larger platform.
Yeah. So you're able, I was wondering if you were still associated because I'll look up and I'll see a European symbol and I'll say, oh, it's a 3X MicroStrategy. And then I'm like, well, I think Will's associated, but can you run that when you're in New York? It's just they're just different offerings to different marketplaces, I take it then.
Exactly. Yeah,
Okay.
exactly right.
All right. And what about let me look on. This is always one that I already know what you're going to say, but I'm going to ask it anyhow. It says, "Do you have any?" It came from one of my subscribers. Do you have any strategy to protect against extreme moves in the underlying position?
Um, the short answer is no,
Yeah.
because with the levered funds, maybe slightly counterintuitively, depending on,
Yeah.
if you're asking that question, is people want the extreme movements.
Yeah.
So they don't want to be protected because they want to get 2x the daily
Yeah.
performance. I would sort of maybe reframe it and say we have the short versions. So we
Yeah.
have
That was
the
my
2x
follow
or
on. Do you
1x
have any
short.
inverse
Exactly.
funds, right? Now,
Now, those again, they're not going to protect you from extreme movements unless they are on the downside in the stock, where clearly they're designed to give the inverse. So if NVIDIA goes down by 5% in a day and you're in the 2x, which is NVD, and the 2x inverse or the 2x short
you're
NVIDIA,
gonna
then
be
you've got to
up
go up
10%.
10%.
Yeah, yeah, correct.
But these instruments are really designed for trading, so they're not designed for people who are there's no element which is a capital protected element or anything like that. Um, I think that's a sort of a potentially new series of funds where we can perhaps use options to deliver some kind of capital protection, tail risk hedging, things like that. This may be a
Yeah,
new project.
yeah,
But yeah, at the moment we don't. And in the traditional, our non-levered ETFs, again, we don't have anything that would, protect extreme movements. It's more you're investing in the market, whether it the equity market
yeah,
or the pass-through security market or the commodity market, and you're exposed to the rise and fall of that market according to the
yeah.
strategy.
You know what? I just thinking with a trader mentality, but it's hard to tell them that you have a product. I would say, well, you have a VIX, you have a UVXY that is intended to be in your Yieldboost family, right? What happens when the market has a wild move down? The VIX
Yep.
shoots up. And so I would say to them, and I tell my subscribers when I'm reviewing, taking NVIDIA or Coinbase, I'll say, well, looks like Coinbase is really going to run. It's moving. So this income fund that another family had is going to get capped because their calls are out 4% and it's already run 11%. If you think it's going to continue, you should be buying Conal, right? CONL, and get
Yeah.
that upside movement like a growth stock at the same time you're in the income fund. It's going to produce some income. It's just not going to, the NAV's not going to move up as well.
Yeah. Yeah.
So,
Exactly.
I always try to educate them. And to some people really get it and have a trader mentality. Some just want that income. So I think this will be a successful launch for you. But I do think what I'm hearing is there's a lot of people that dove in and don't think about, they're chasing the yield and not really saying, am I bullish on this underlying? If I'm buying a 2X or I'm buying a target at high yield, whether it says target or not on a very volatile stock, and it's based on it moving up, they better be bullish on that because if it moves down, it's not going to perform well. So,
Yeah. Exactly.
um, so you're covering quite a wide. I like that. I love, now I think this was something where I did a guesstimate. And are you at a point where you can talk about which funds, and you probably aren't, that you plan on having under the underlying, I guess, or is that still something that do you even have to disclose that when you present to the SEC?
Um, we don't.
Okay.
And again, the reason is that it's not a disclosure event in the way that you're thinking about it. It's more you don't want to trap yourself into
I see
one
what you're saying.
particular
Yeah. Yeah.
fund, which again, the liquidity might change on that.
Yeah.
And again, nothing's going to change in 6 months or
Right.
12 months. But if we're talking like 5 years from now,
Sure.
you just don't know. That fund might not even be around.
Exactly.
So you then you have to build that flexibility into your design so that you're delivering what the outcome is, but the actual ETFs that you're using or the options on the ETFs that you're using, you
Yeah.
have the flexibility to change those.
What's your thoughts on the competition, a different category of a fund that evolved to the weekly payer? Are you familiar with one of the funds that they use an index? It's not leveraged
Yeah.
index, but they're just writing daily options on the index, and it's very popular. I guess I shouldn't say I don't know why. I know why, but it didn't matter to me. They really love that weekly paycheck, even though it might be the same as the monthly. They're getting it 4 times, right? So you may in fact get that. I think one of my questions was which of the if you're going to pay monthly income out of these new ones, have you figured out which week you're going to target, or
Yeah.
is that okay?
It's interesting. I've had this question before, so it's definitely something that people are thinking about.
Yeah, a
Um,
lot of people are thinking about it. Trust me.
Yeah. So look, I think we're always sensitive to what the market's looking for, or what a section of the market is looking for. And so from that perspective, I think whether it's weekly or whether it's monthly, we're going to kind of go where I think it's most popular to do that.
Okay.
So that's one hand. I think the other hand that we should talk about from a fund management perspective is that operationally, when you start to do these more frequent payouts, there is more of an operational workload. And there
So
obviously
the
there's more
management
expense
fee,
because,
yeah, is
yeah, to pay 4 times a month versus one time, there's more, that's more expensive, clearly.
right.
That's just like saying, turn your portfolio over, more times than
You got
once a
more
quarter,
trading
once a
fees.
week.
Exactly.
Exactly. Yeah. Yeah. So all of that ultimately has to be borne by the investor. And it's again always a balance in terms of, how much of that does the investor know? And if they do know, how much are they willing to sacrifice for that weekly payout versus say a monthly? I don't
Yeah.
know.
Yeah, that the family of funds that's doing it, they have the S&P and they have the Nasdaq 100, and they're rolling out the Russell 2000,
Yeah.
and they're just simply writing daily because of the mass amount of volumes. And somebody asked me, well, are there going to be more weekly payers on the single stocks? And I said, well, there could be, but right now, most of the single tickers, or all of the single tickers, to my knowledge, don't have daily options. It's only the
That's right.
volume up around the indexes, but who's to say in the future that they don't have, right?
Yeah, that's right. And again, that's a great point because that's about, again, the evolution of these markets and how, again, from a management perspective, that these things can change over time. And so today, you might not have the ability to do that with single stocks.
Right.
But who's to say in 6 months' time that might change, or 12 months' time that might change?
Well, here's a
So
thought. Here's a thought for you if you guys haven't thought through this, because one of my subscribers said something, oh, I really wish they'd pay weekly. And I said, well, I don't think they will because most of these underlyings, but maybe some of them have daily options. But let's say they all just had weekly. Everybody has weekly. I shouldn't say everybody, but most funds have weekly. So let's say you're writing weekly and you're collecting money on that put sold. Then at some point, you could just be paying in arrears a week back at what you were successful or not successful. Now, your management fee likely would go up because you're paying 4 times in a month, right? Um,
yeah.
but you could do it in theory without
Yeah,
having
no,
dailies. Yeah.
yeah, there are ways to do it. I think again, it just comes down to how much operational lift,
Yeah.
are you willing to put up with, and also, again, it's not necessarily you; it's always your custodian that you work with, your counterparties, because they're ultimately going to make the payment, on your
Right.
behalf. So it's, again, how much pain can they bear, or do they
Yeah.
have the technology that makes it pretty seamless? And actually, it's not a problem at all.
Do
That's
you
going to vary by counterparty.
do you pay out any income on any of your funds today, or are they all just leverage funds that, okay, so you do.
Yeah, so they're all what we call 40 Act funds, which
Okay.
is the technical term for mutual fund.
Okay.
So as a 40 Act fund, you don't pay corporation tax. And so the
Okay.
trade-off is that by law, you
You
have
have
to
to push
distribute
out all the 90, is it the
90% or
90?
more,
Yeah, I thought
minimum
so.
90% of income generated, and
Okay.
that's to maintain your registered investment company status.
Okay.
So as a non-taxable vehicle, you have to distribute all of your income. So even though with leveraged single stocks, there's ways to generate income because of the derivative contracts that have been used, and income comes in the form of, it could be capital gains, it could be from income generated on the actual stock itself. It could be from corporate actions,
Okay.
all sorts of different reasons. But yes, we have to distribute that to the
Okay.
shareholders
Okay.
every year. It's the same with any fund. It's just, as we
Now,
talked about earlier briefly,
what
some
are
funds
your
don't.
what are your distribution frequencies now? Monthly on those?
Well, we
Or does,
try to do it as minimal as possible
okay,
because with those underlyings, we're not, the objective is not to distribute income,
okay,
on a monthly basis.
gotcha.
We'll distribute the statutory amount of income or what we're required to do from a regulatory
Okay,
perspective. And typically that's at the end of the year. Um, but the reason to buy 2x NVIDIA is not because we're generating income. It's
Correct.
for the actual return, the 2x return. Where
But
we
when,
have something like HIPS, which is our income fund, so we have a high income fund, HIPS.
yes.
That's a monthly distribution,
Okay.
and so we pay a fixed cash distribution every month.
Do you
And that one, yeah.
do you use somebody like Foresight, or do you use a partner company to do those distributions? Okay.
Yeah, so we
Yeah.
have custodian, we have fund administrator,
Okay.
fund distributor. So all of the same kind of setup that you have to have from a regulatory perspective.
Yeah.
And then ultimately, it's typically your custodian, which is you're going to make those payments.
Gotcha. Okay. Makes sense. I just, I learned so much in this go around. And when you described, that was very good. When it's something that I've been teaching my viewers, I said, peoples, these offerings, another fund family that are paying monthly or sorry, yeah, they're paying monthly and they're paying a high yield. And of course their yields vary on all single stock tickers. I said, this technology is something that's been around a while, but it was only available to high net worth individuals. And they were
That's
going and
right.
they were paying. I said, so now it's come down to retail. So and people say, well, 1%. I say, for what they're doing at 1% when it's working is fabulous. Go ahead and try and do it yourself, to have the amount of capital to come up and sell calls on MicroStrategy when it's trading at 1800. I mean, it subsequently just had a 10 for 1 like NVIDIA, but um, you're getting that benefit, right? So anyway, I always
That's it. I mean,
describe to them.
but yeah, it's always the value conversation, isn't it? That
Yes.
typically I think that people are used to a sticker price for ETFs that's very inexpensive because those strategies are almost like entirely computer generated, that
Yeah.
there's no one actually running them.
Yeah.
And therefore there's no work going into it, and that's why they can charge just a little amount. Whereas when you have somebody that's actually having to sell options, and that's a much more sophisticated strategy, and therefore
Yeah.
that's not free. But sometimes I think people struggle a little bit with that value, and value is always relative.
Do you, for your European offering, do you house people in Europe and London or somewhere else
Yeah,
there? Okay.
yeah, we've people in Europe and even in Asia as well. So we
Oh, okay.
have funds. Our ETFs are registered in the Japanese market, for example. So we get a lot
Okay.
of interest from Japan, from Korea, from other Asian countries. So kind of all
I
over the place, really.
even on my channel, I get Australia and Korea a fair amount, a
Yeah,
little bit of
Australia.
Japanese. Yeah. So everybody I think these income ETFs people are crazy about them, but they really are still learning about them. Like I said, I'll say, don't chase yield. You'll say, well, Bruce, which one is the safest that's not going to go down? Which one am I going to get no NAV erosion? I'll say, well, I
That's the
wish I
crystal
knew
ball.
that. Yeah.
Yeah,
I said,
if I
there's
had
some
a
ways
crystal
you can
ball and we,
handle that, right? If you're over invested, buy some puts or, do something
yeah,
else. So it's pretty fascinating. Let me see. Um, so have you guys tried to back test any of like in your Yieldboost stuff, just gone out and tried to look at it and do that? And did that help you sort of strategize out the methodology
yeah,
that you might use?
yeah. So we will never launch a fund that's not like highly researched and
Okay.
back tested. Part of that's going to be part of the regulatory registration process, but beyond
Really?
that,
Okay. Okay.
it's about launching strategies that we think work. Now, the problem with the back test, as you know, is I've never seen a bad back test,
Yeah.
because that's always designed with the benefit of hindsight.
Yeah.
And so in these trading conditions, and as we've seen with major every major blow up, in the market, whether it's 2008 financial crisis or whatever, nobody's backtest predicted, what happened. So they're only as good as the data that they're run on. But yes, they're very highly researched. Backtest is in there. The strategies work, but of course, market environments can change. That's always the caveat.
Yeah, I always remind people, I said, I've never seen a really bull market that didn't have a major 50% retrace somewhere in that massive bull
Yeah.
cycle. And when those kinds of things happen, it's, I mean, I had a hard time with that end of 2000, well, really in the middle of 2008 into early 2009 with, gold went down 30% from 1,000 to 700, but the gold stocks went down about 90%, right? So my
Right.
same strategy, I was selling puts every time it retraced, I would sell puts. Well, didn't work very well in 2008.
Right. Yeah.
So, but I was up so far by then that it wasn't that bad in the effect. So market timing is interesting. Let's see what else I had. And also feel free to ask me anything. And I only say that because I have a lot of people in the Discord. I participate in others, so I see from beginner to, you know, uh, experienced people, and they're really crazy about the income funds. But like I said,
Yeah.
they'll say things, they'll want to corner it, and they'll say, "Well, I want a really high yield." We talked about this, but I want NAV security, and
Yeah.
I'll say, "Well, that's difficult, but I can point you to a couple, right? I can point you."
Yeah.
And
It's
then they
hard.
go, "Oh, the yield's too low." I go, "Well, you said you wanted to prioritize the NAV, right?" So,
Yeah. It's all risk and reward. I always think sometimes it's interesting because annuities, annuities are hugely popular financial product.
yeah,
And what is an annuity? It's a level of income or an income stream with 100% NAV erosion
yeah,
that you literally give up your NAV day one for a stream of cash flows.
yeah.
So when you sort of start from that principle, people
You
should
know
be
what?
used to
Thank you for saying
entire
that,
NAV erosion.
because I'm going to bring that up next time somebody asks me that. I'm going to say, you do know what an annuity is, right? You structure something for your remaining years of life and you want to spend it all and try and time it, right? And insurance companies
Yeah,
are very good at algorithms
very
and
good at that. And we've never really thought of it that way, but that's what it is. It's 100% NAV erosion for a stream of cash flows. And that is a major, major financial planning tool.
yeah,
Um, and I think sometimes that's a useful framework to think about then. Okay, so maybe NAV erosion's not that bad.
yeah,
And if I do it in the right, I mean, for example, with MLPs,
yeah.
as one of, so we have this HIPS ETF, which a
Uh-huh.
part of that, it's equally weighted in MLPs, REITs, closed-end funds, and BDCs.
And what's it
But part
targeted?
of
I
the
mean, is it
attraction of an
target? You said,
MLP,
oh, sorry.
yeah,
Go ahead, Will. I was going to ask you what the yield was when you
no, no, no,
finish on
yield's
like a
just over
hip.
10% per
Okay, I was
annum.
going to say that 10 to
Yeah,
12% usually when you talk REITs and MLPs and okay.
yes. So, but the main draw is it's got a fixed cash distribution. So it pays 10.75 cents per share per month. So when you buy, you're locking into that yield. So we get this
Okay.
question about the NAV erosion all the time. And with something like MLPs, it's interesting because almost like the reason you're buying it is because of the NAV erosion, because that's the tax benefit that accrues to you. So when you buy an MLP, you're getting income. So let's say it's 10% income on your investment every year, but part of that income is a return of capital. And so you're eroding your basis, your tax basis,
Yeah,
that when you eventually sell the MLP, and it clearly it won't go to zero, but when you're selling the MLP, you're kind of converting that income to capital gains.
gotcha.
So it's a really interesting concept that after taking 10% per annum, for X amount of years, you might not end up with 100% of your NAV left, but you still have something, as opposed to giving it over to an annuity where you have
You have
100% NAV
nothing.
erosion
Yeah. Yeah.
and you're
Yeah.
not getting 10% per annum.
Right.
And doing so, it's an interesting thought process. And I always think that, again, it's about prioritizing what you need kind of in your life. And if 10% yield is attractive or is what you need to pay mortgages, monthly bill, whatever it may be,
Yeah.
then it's the surety of that payoff, I think, that's more important, or should be more important, than whether the actual value of the fund is growing or declining, which of course it will do depending on market conditions.
Gotcha. How about now? What do you call the tax statements? Are they 19As? I forget the name that you publish where you talk about the percentage of ROC or fully taxable income and the breakdown. And there's a form number. I forgot what it is, but and
K1,
then go ahead. I'm
is it
sorry.
K1s?
No,
K1s
not
you're
the
talking about?
K1. I was talking about like on these income funds where they're paying, well, they're true on almost anything, but the fund families that are paying out the income monthly, if you're doing it on a index fund and you're writing, say, take the one that's doing them weekly. So
Mm-hmm.
when they pay those out, since the underlying is an index fund, it gets categorized as a 1256 contract. So it has a 60/40 ratio.
Okay.
But there are even further, like if you have a single stock ticker, there is no 60/40. There is no tax break. It's all ordinary income if it's in a
Right.
taxable account. So if you're in a
Yeah.
taxable account, not in an IRA or anything, or Roth, then when you get the income, but what I've noticed when the fund pays the target IV, but didn't really earn that, then they designate a portion of the payment as ROC, return of capital. And they
Yes.
have to do all that to still get their 90% payout in the year. And they'll put those statements out, but they're not always accurate until the end of the year when they really get adjusted. Then when you get your final 1099, you see what the actual ROC portions of some of the payments were. So I get, and there's
Yeah.
I want to say a 1940, a 19A. It's just not right in front of me at the moment. So that's what happens there. So you guys will be up against that once if you're doing some kind of monthly income as opposed to just a year-end settlement situation.
Yeah, that's right, because the income you earn on a monthly basis, but the taxes you pay on a yearly basis.
Yeah,
So you have to estimate the amount of tax that you're going to pay
correct.
based upon the activity of the fund, based upon the amount of income that's been generated, based about the amount of return on capital that's been generated. So that can be a bit confusing, but the main sort of lesson is that at least with our funds,
Yeah,
that's an estimated number until you get that final 1099, whatever, that says here's the
right.
amount of income that was generated, here's the amount of return on capital that's generated, et cetera, and that's the definitive one. But yeah, when we're publishing those numbers typically throughout the year, that's an estimated number.
Correct. And I
We don't know
see.
because we don't know the real number.
Right. Yeah, exactly. And we're all subject to that same thing. So I see that you I think my two favorite, well, I should just say in general, I have one or two tech companies that I really like, single stock, and then mostly I like commodities. And so anywhere from energy and I also like Bitcoin, but I only like BTC. I really not
Yeah.
meme coin and all of that. I like it as a digital gold
Yeah.
if I want to adhere to what Michael Saylor says. So anyway, I think you guys have got a really nice set coming out. So most of the people I know are sort of excited to see what you guys are
Yeah.
gonna roll out, and hopefully we won't have to wait too much longer. So uh, let me
Yeah,
check.
watch this space. If you sign up on our website, just
Oh yeah, well then you
a
can.
quick, yeah,
Okay,
you'll get the alerts. So graniteshares.com is our website. There's a
yeah,
pop-up that will come up. If you just pop in your email address, you'll be
yeah,
on the list to get alerted when any new funds come out or any new news comes
excellent.
out.
Yeah, and I do that now because oh, I know that triggers a thought. So for some of the people like myself and some of the other fund families that have a number of income and single stock tickers, like some 20. So I report weekly, or I'm sorry, I report daily on the transactions if they have any transactions. So these are
Mm.
funds where they'll go out on say it's Coinbase and they've created a long stock synthetic and then some days of the week, not all, if they get new funds coming in, they'll deploy that capital. They'll sell a call or they'll put on additional counts of contracts for their long stock synthetic, and then they'll write a covered call. So it's easier for people like me to report to my base, hey, we're looking pretty good this week. We should collect, we should do this. Do you think you would do anything similar where you would put the daily transactions, or is that not something you've even thought about at this point?
It depends on what you're talking about specifically, Bruce, but the one of the major benefits of ETFs is they're
Yeah,
completely transparent. So you can go on any ETF issuer's website
yeah.
and you can look at the holdings, and they should have a holdings file that tells any investor what's in that fund on any given day.
And that is
So,
true. And I utilize that. But I'll tell you one little nuance that I usually
yeah,
need because I do a pretty detailed accounting review. So let's make up a scenario. So you've got a fund and it's based on Coinbase, a single ticker.
yeah,
And you put on a synthetic long, okay, stock. So you bought a call, sold a put. So you're
yeah,
basically mimicking being long. Now you come in and you sell a weekly. That synthetic might be a monthly or a 2 month or a 3 month, and then you come in and you write a weekly. Well, what happens is what you wrote it for is the amount I track. Yes, and my holdings tell me if you closed any out, like you put 500 contracts and today you closed 200, but I literally get, we sold 200 and they only leave that up there for 4 or 5 or 6 hours reporting, and then they come out with their daily holdings, right? So I
right,
can subtract the difference, but then I get to see the detail. And not many people want to do it at that level, honestly,
right.
and I only do it for a few key ones that I'm in, and I share that, and it helps my channel. So
Yeah.
that's
Yeah,
why I was
interesting.
asking that. So you probably something you hadn't even thought through, right? At that.
Yeah, not really. I haven't met anybody looking at the holdings files in that level of detail. So well
Yeah.
done.
Yeah. Um, and then when it gets into commodities, it's very difficult because they're selling futures and futures contracts out, whether it's backwardization, and then they add swaps. And I don't even bother. Even though I traded the whole last gold cycle a lot in the futures market. I haven't done it
Yeah,
yet, but I'll probably be back in it on this next gold cycle. And then some of the Bitcoin ETFs are based on those, right? Like ProShares
yeah,
has one, right? Um, so that
yeah,
should be a very popular fund for you guys as well, I think, when you launch that within your Yieldboost. I really, really like what all you've done there. And you're even planning on some international like China. What else do I see in the list? Biotech, small cap, treasuries. What have you noticed in your years in the U.S. that you didn't notice in Europe? What's the adjustment of of running a firm with U.S. and the SEC and that kind of stuff? Did that take a little getting used to?
Yeah, it does. Certainly the level of compliance is very, very heavy.
Yeah,
So
yeah,
although the market is clearly a lot bigger, so that's always
yeah,
the pro and the con, right?
yeah,
The
yeah,
con is it's very, very heavy regulatory and
yeah,
compliance environment, but the market is a lot bigger.
yeah,
So and there's a number of other benefits. So here, obviously, you're dealing with one currency, one
yeah.
exchange or one market,
And it's a whole different
one
world
language.
in
Yeah.
Euroland, right?
And so over there, you have, imagine a regulator pretty much for every country, different stock exchanges, current currencies, languages. So all of that just means that you kind of fragment your liquidity and offering by not having a centralized exchange, in Europe where, you can have one product and it be accessible to everybody. So that's a challenge. And it makes it less efficient as a marketplace than here in the US. And then Asia, similarly, you have, for the most part, it's easy to access the US market from Asia.
Yeah, yeah,
And so that's the default market for a lot of people because they want to go outside. So let's say you're in Japan and you know that there's only one NVIDIA, but
right.
NVIDIA is in the US, so you have to buy NVIDIA from the US. Well, outside of your own market, the US is the number one market. So it's
Yeah,
easy access for them to come to the US because that sort of tech infrastructure was built a long time ago. So that's pretty seamless. And yeah, it's just getting easier and easier. I think
yeah.
just
Oh,
globally,
good.
you're trading from an app, anywhere in the world almost,
Yeah.
accessing markets, and that's only going to get easier.
What's your thought of the acceptance into the financial institutions so far with Bitcoin, with BTC, I should say?
Um, it's like most things that we encounter, where some financial institutions are more, let's say, progressive than
Yeah,
others. And, some it's not an issue. It will just be accepted, again, to the limit of what they can do legally.
yeah,
Others, there'll be a philosophical, reason as to why they don't do it or participate in it. And that won't change. It was like cannabis. And I know cannabis, there was, another, or there were more issues, but it was the same thing whereby you had some institutions that were prepared to offer services linked to cannabis,
yeah,
others that just said no. So
yeah,
it's very much, it depends on the DNA of the institution, but clearly the political environment, is probably the major X factor. And,
yeah,
if you get a political environment that is more conducive, or,
yeah,
that is, clearly from a regulatory perspective, much more, willing to have this be a mainstream asset, then I think every institution almost, will have to sort of follow suit on that basis. But at the moment, they can sort of pick and choose based around their sort of DNA
yeah.
or comfort level with it.
Well said. Yeah, I clearly see it both political and fiscally conservative. I'll have subscribers and people say, "Well, Bruce, I really want to buy, Ybit or BTC. I want to buy this, but Vanguard won't let me," right? So, I mean, they're just picking a family of funds or something, and I say,
Yeah.
"Hey, I don't know what to tell you. That's the uh,
Well,
it,
that's actually an interesting one because there, I think in this day and age, it's almost the case that people should have, multiple brokerage accounts.
yeah,
And just because you deal with one particular institution, that's a classic example of where Like you as the consumer have the power, you have the choice. Like don't be trapped just to one institution if they don't offer what you want, because there are plenty of other people that will offer it and do offer it.
Yeah.
So I think now as we're getting at least a lot of customers I talk to, have different accounts, and it's for largely for that reason that it may be the case that you're not available to buy XYZ, on whatever platform, but you go to another one and you're able to do it.
Yeah.
And I think that's the kind of the lesson that you have the choice. Never sort of never lose sight of that it's your money and your power to control what you do with it, and don't let some institution sort of tell you no.
Well, and that's something that I tell a subscriber base as well. I talk to them about this is still early in the evolution of income funds. You're going to see variances. You're going to see people try one way, they're going to try another way, whether it be a weekly payer, a monthly payer, a high yield, a medium targeted yield with a safer NAV. And you're going to see things and for us retail investors, they're better products and they'll get better
Yeah.
over time. So anyway, I really appreciate your time, Will. I got a minute or
Yeah.
two
Great to talk
left
to you,
on
Bruce.
here. Is there anything I can tell you or anything you have to ask that this fourth week, by the way, if anyone ever says to you on a monthly, you pick a time to pay, the fourth week of the month is the one that almost nobody's paying except for a weekly payer, right? So
Right.
just an FYI for you on that.
Yeah.
Uh,
Interesting.
Anything else that you have for me?
Well, I think I need to come back when we launch the yield boost
Yes,
offering, so we can
I,
definitely
I would love to do that and talk
talk in
about that
detail
as
about
well.
that.
Terrific.
But yeah, no, thank you so much for having me. And
Yeah.
if anyone wants to learn more about what we do, please go to graniteshares.com, look at our website, and feel free to get in touch if anybody has any questions.
And they're chomping at the bit, so I'll remind them when they see this, people go out and sign up on the website so you get the
Yeah,
notification for the launch. All right, Will, thanks again. Much
great.
appreciated.
Thank you so much.
Okay, you
Thanks,
too.
Bruce. Good to
Bye.
talk to you.
All righty.
Bye.